Hi guys, Boris Dorfman here with LBC Capital. I did not fall off the face of the earth, but I've been on vacation, so if anybody doesn't know, you can guess where I'm at. I've been asked lately to say who our target audience is, who borrows money at high interest rate, who's the perfect borrower for us, what is hard money. So I'll give you 5 examples of the previous transactions we did in the past few months. I'm on vacation, but I'm still working. We have 2 most valuable commodities right now. It's time and money, right? So hard money is for very experienced investors. Let's call them experienced investors. And this is for people who value their time more than they value money, and they understand that time is money. So I'll give you a few examples. One, during the pandemic, there has been a rise in investments for daily rentals, Airbnb type of investments. You buy a property and you rent daily as an alternative to hotels, right? In California, you see areas like Palm Springs, Desert Cities, Big Bear, Mammoth Lake. They've always been in demand for vacation rentals, houses, but now the demand is through the roof. The banks didn't catch up yet, and the demand is huge, okay? As an experienced investor, what do? You need to buy a property and there's 75 offers. There's cash buyers. You need hard money because it's speed. You can close within a week, okay? After you bought the property, you can go to the bank and you can refinance, okay? So short-term rentals, speed. Bank takes 30, 45 days, in some instances, 120 days. Okay, let's take value-add commercial properties, office space, multifamily, where you take a multifamily building with rent-controlled tenants. You go to the bank will ask you what are your rents? Your rents are from 1985 at $400, where market rent is $3,000, and the bank says, well, we'll finance 15% loan to value. You have to put 85% down payment. Private lenders understand that this is a temporary issue, and if the investor is experienced, they're buying this property, they have a game plan of relocating the tenants or bringing the value of the building. Or sometimes you buy a 20-unit building and you have 10 vacancies, right? So you're only collecting rents from 10 places. Okay, so number 2, undervalued tenants that underpay on commercial properties or multifamily properties. Number 3, properties that are normally financed with SBA loans. So these are your owner-occupied investment properties. So you manufacture kitchens, you need to buy a warehouse. SBA loan takes 3-4 months, and also you need 3 years of financial statements. You go to the bank and the bank says, well, that's great, Johnny, but where's your 3-year tax returns? Okay, and Johnny has been working for somebody manufacturing kitchens for 15 years, but he just started his business. It's a risk for the bank. This is a hard money transaction. Okay, experienced investor knows what he's paying for, what she's paying for, and what the value of overpaying for the interest rate is. Makes sense. 2-3 years passes, they refinance with an SBA lender. Number 4, construction rehab loans. Okay, lately developers have been getting properties entitled and selling them with permits ready to issue. RTI, commercial properties, multifamily construction, single family construction. There's a ton of demand. You're coming in with your bank financing offer with 3 months escrow. Nobody's even taking you seriously. It's not about the money, it's about probability of closing and how fast can you close. Okay, so plus there is a lot of demand for these properties, so you're bidding with the guys that can close it in a week, that are paying cash. hard money in certain instances are just like cash. So in these instances, hard money can be used as a bridge. You acquire property, then you go to the bank and get a construction loan, or you can get a construction hard money loan based on the future value too. Again, time is money. You get this property, you may not get this property with bank financing. It falls out 6 months later, the same property will be 10% more expensive. Let's call it $1 million property. You don't get it, you look for a seller that will wait for you to get a bank loan, $1.1 million 6 months later, 9 months later. Here, you come in, you buy the property, you get a construction hard money loan, you build it in 10, 12 months, 18 months, you sell it, okay? Otherwise, you're waiting for the bank 3, 4 months. Or you use hard money as a bridge to get in to buy this property, then you go to the bank. Or when you, especially when you have time, when you're buying raw land or something for development, you're putting 50% down payment, you're getting the property entitled, and then you're gathering the documents and you're applying for construction loan, okay? I'm looking at my notes. Number 5. Well, number 5 should be number 1. It's really fast closing. Fast closing, that's why you're paying triple the bank's rate, because time is money. By the time somebody gets a bank loan for the acquisition and construction, you get a rehab project. It takes you 2 months to rehab it, 1 month to sell it in this market, another month contingency, 4 months between the time you buy it and the time you sell it. Yes, you're overpaying on the interest, but at the end of the day, you're making money. Thank you guys. Please subscribe down below, and I'm still here and I'll get you guys content when I have time. Thank you.